and gentlemen, welcome to another Scope Institute educational event. My name is Kim, and I will be your event manager for this event. You can chat with me during the event, and I will do my best to answer any of your questions. This educational event is about transitioning, exiting, and selling your business. None of the instructors provide legal advice. It is for informational purposes only. You should consult a professional advisor before taking action to exit your business. We're now switching to the Executive Director of the Scope Institute, Mr. Brent Slinkard.
Thank you, Kim. I appreciate your introduction. It's a pleasure to be here with you. And our country is facing a serious problem, and few people are talking about it. Over the next 10 years, 80% of all boomer business owners will exit from their life's work, be it through acquisition, merger, internal succession, or unintended consequences. Over $12 trillion is at stake in this transition. But here's the problem. Only 20% of those businesses will sell. The vast majority will not sell because of misguided assumptions about exit plan and selling their businesses. Many do not have an exit plan or are aware of exit strategies. And most importantly, have not started the process, which can take years to successfully execute. In truth, business owners have far greater immediate areas of concern: cash flow, supply chain issues, profitability, inflation, motivating employees, keeping employees, and finding people that want to work. There's never been a more troubling time for business owners, yet the one thing that is far from their consideration is the transition of their business. This is the immediate call to action that requires a national educational movement, helping people prepare and plan for the eventual exit of their businesses. That is why the Scope Institute was created, a nonprofit educational entity doing events like this and other live events throughout the nation. We are here to help prepare the business owner for this eventual event. So today we are here to help business owners learn how to successfully exit your business through presentations from national and regional experts that understand this field. You might be years away from exiting your business. Most people are. But you will learn here today how to prepare, plan, and eventually successfully exit your business. I'm looking forward to getting you started. We have multiple presenters here for this program, many of which are located throughout the country, but they are national experts. They are thought leaders on this very topic of transitioning, exiting, or even selling your business. I want to make sure that we give to you a perspective from each of these various disciplines that I think will be highly informative and educational and really help you begin thinking about this process. Our work in Orlando is led by Carol Dewey, who is the Scope Institute Director of Education in the Orlando area. And I'm going to welcome her to our webinar here in just a minute. But I want to be clear, we are doing additional online educational events like this, as well as live workshops in the near future in the Orlando area. Carol, let's go ahead and get started. If you don't mind, join us here on our webinar event. It's good to see you. How are you?
I'm good. Thanks for having me on this, Brent.
We're going to talk about some of the aspects of exit planning for business owners. You bring to bear so much knowledge in this space, specific knowledge that I want to get to here very quickly. So, Carol, I'm going to put you on the spot because I'm going to ask you to talk about your family business. There's such a story here that I think is relevant for our discussion today. If you don't mind, share with us a little bit about that.
Sure. My family, my great
great-great-great-great-grandfather founded a print and bookbindery business way back in the day. Of course, he was one of few that figured out how to put lines on paper. He even bound some books with some pretty fancy covers for back in the day. And this family business created opportunities for 4 generations of my family. So I guess you could say we have a legacy in the print and bookbindery business, of course, until we didn't. My grandfather had only made it to the 6th grade before World War II broke out. His older brothers were called up to serve, of course, so he left school and had to go to the factory and do just about any job that was required of him. So he was kind of groomed and polished over all those years to become CEO of the company. And while he was CEO of the company did celebrate over 100 years in business. So
That's
lot.
because how many small businesses make it to a century? Very, very few. And the other part of this is, as you well know, transitioning from one generation to the next. I don't remember the data off the top of my head, Carol, but it's staggering how few are able to transition.
Actually even make it through that 2nd generation, much less a 3rd or a 4th generation. So yeah, I mean, the company was doing great. Everything went along just fine. My grandfather, of course, only having a 6th grade education, he surrounded himself with experts, right? He surrounded himself with financial, accounting, and legal experts. These were like, this company was in Cincinnati, Ohio, so it was in downtown Cincinnati, and he had the best in town, and he spared no expense in paying for these advisors to help him, build and expand this company. And unfortunately, there were a series of unfortunate events that kind of snowballed. It was about the time I was graduating from college, as I went to the University of Cincinnati and got my degrees in economics and finance. And he had to make that painful decision to close the doors forever. It was a very sad day for the family. But I think what the important thing that people miss is that your expert professionals need to all be communicating and talking to each other as well. Because it's kind of like, to me, it's kind of like going to a doctor. And when you go to the doctor's office, what happens? They want you to bring in the entire list of all of your prescriptions. Why do they do this? Well, they do that because if they're going to prescribe something for you or take a look at what's going on, they want to make sure that there's not going to be any bad interactions between what you're taking and what they might prescribe. It's the same thing when you're looking at legal, financial, and accounting services all in one. They may have a really great idea in their silo, but how much is the bad interaction between them? So if you think about it, there's no panacea in life, right? There's no magical financial plan or anything that doesn't have at least some side effects. But what we were trying to prevent is those bad interactions between certain decisions, certain roles, whatever that might be, because that can really be a problem.
Yeah. I'm sorry, that's gut-wrenching, the story itself, and you shared it with me before, just in our conversations. Mm-hmm. A couple things that I heard you say, and then there's one that I'm curious about. Your statement about how all of your professional advisors need to be on the same page. Mm-hmm. I can't tell you how often I've heard that, particularly in exit planning, which is why we're here today. Right. But to your point, it's also critical when you're talking about estate planning. Mm-hmm. And get everybody on the same page. All of your professional advisors, no matter what their discipline, making sure they're all on the same page. That's an excellent point. Carol, given this conversation, I want to share a slide. I think this is a great illustration of how many people might be around the table. Now, this may not be your particular situation, but at least gives an idea of just how many different disciplines are around the table. To your point, Carol, been sharing with us how important it is to create your team. If you don't mind, just make a few comments about this.
Okay, well, this is a perfect example of what I was just saying. You do need, so this is specifically for exit planning, and I was saying, just in all of your decisions, we want to have a minimum of, maybe legal, accounting, and financial to come together to help with some of the bigger decisions. And I can see quite a few things here: the CPA attorney, the growth consultant. But some of those roles could possibly be, it could possibly be one person that has expertise in both of those, because there might be some cross-reference in them. But I can see very clearly here that these are, all of these are important pieces to pull together to complete the whole pie. I mean, I like the round table because it looks like it's a pie chart with all the pieces. But yeah, it works really well. I mean, one thing, let's see, I'm looking here. So what I don't see on here is like an insurance person, but the financial advisor could probably also be the insurance agent,
Yes.
that kind of thing. The estate planner could also be the attorney, or maybe it's an attorney in a different discipline. But yeah, I mean, you really do need to organize a complete team. I mean, if you think about a business owner, they have put not only, when my family situation happened, at first it was just very sad, right? There should have been a team. There should have been a group like that, and there should have been resources or education for a business owner like my grandfather in a over 100-year-old company. It's so hard to get a company to transition from one generation just to the second generation. And then the likelihood of it going from that second generation to the third generation is even smaller. And we managed to get through 4 generations, and then that happened. But, when I got to thinking about it, it really kind of made me more mad than anything else. But I used to not be able to tell that story without tearing up about it. But yeah, you do need everyone and all the appropriate people to have a seat at the table to make such a big decision. Business owners not only are putting all of their blood, sweat, and tears into something that they're passionate about over a long period of time, but they're usually, if they're smart, they're investing a lot of their available dollars back into their business. So this has now become their biggest asset in their portfolio, right? And we want to make it right, because this is what is you're either going to live on for the rest of your life, forever long that is, or it's over. So you got to get it right.
You bring so much knowledge in this space, and what I'd like to do, Carol, is share a slide here for a few minutes about this. Now, what we're looking at here, if everyone can see it, what we're looking at here is a slide complements Business Exit Planning Institute, deploy what's called the Value Acceleration Methodology. And you can see that there are 3 different phases here. And in the early steps, we look at the discovery process, which is doing an assessment, trying to understand where you are as a business owner and where you want to go, creating a plan, and then moving into the prepare stage. And you can see there's a lot of activities here with regard to understanding your values, mitigating risk, and then going through a process to understand whether we decide to sell or keep the business. But the area in particular, and it's interesting because here it is under prepare, it's considered one of the core values, and that is personal and financial planning. Earl, I want to talk about this because the exit planning process and this value acceleration methodology is so important. But maybe one of the most important parts of this is, as a business owner, I have to understand what is the personal financial planning of my decisions, right?
Mm-hmm.
And one of the areas in particular I'd like for you to touch on is knowing your number. So that means if you're going to sell your business and you're looking to live off the sale of that business, as a business owner, I need to know my number. What does that mean, Carol?
Well, you have to keep in mind that most business owners are moving a lot of personal expenses through their business, right? So you won't have that tax deduction for those expenditures. So what you're knowing your number means how much do you need to live on? And sometimes it's hard to get the same amount of money out of the same amount equivalent in income out of the bulk number that you sell your business for, right? So if you have $1 million business that's generating you know, $400,000 a year in income, well, $1 million a year, you know, selling something for $1 million isn't going to give you the same return. So you really have to understand what is the number, and it's a good idea to kind of really look at what you're running through your business, so that you know, what are you, what is the business paying for, that if the business isn't there anymore, what are you going to have to pay for out of that income that money will generate after you've already sold your business?
Carol, can I ask a question?
Sure.
You know, one of the things I learned personally through the sale of one of my businesses, you mentioned the expenses that were running through our business, and Carol, I had no idea how much expenses I was actually running through my business. Now, I'm going to list some of those, and you tell me if this makes sense. I was leasing a car through my business. I was taking trips through my business and maybe staying an extra couple days on the backside. I ran meals and entertainment through my business because I was entertaining clients or buying their dinner. And Carol, when I learned that number of how much at the end of the year, I was spending in that space, and now understanding that I can't do that anymore, that was really an eye-opening experience. Am I right? Is that something as business owners have to look at?
Yeah, that's something you absolutely have to be aware of, because as business owners, that's just what we do. That's what, that makes the most sense. We're trying to mitigate taxes, and if we can run those things, cell phones, all of these things, once you no longer have that business to run those expenses through, well, then that comes out of your spending plan, or what you have for month to month, year to year.
Yeah, and I only mention this, Carol, because we're talking about know your number, and that's just additional add-on that I had to learn the hard way, which is I could no longer do that through my business. So I had to add that to my number, right?
Right. Yeah, because whatever that number is, and I do have a couple of clients, they're heavily weighing that. And, right now, they're like, okay, what do I need to sell this for in order to make up for all of that? And does the EBITDA and the valuations that we're talking about, does that match with what the company is worth?
No question about it. While we're here, and I'm not asking you to take a deep dive, Carol, but when I look at this values and I see personal and financial planning, I can't help but think about estate planning, right? Does that figure into this?
Absolutely. Your estate, like I mentioned in my story, when you're talking about estate planning, it is critical that you get that right for future generations, if you're concerned about that at all. Some people may not be concerned about leaving a legacy, but the estate plan in and of itself, you do have some things to consider And I had a client tell me just the other day when we were having a conversation, because they moved to tax mitigation, and he was like, well, I believe estate planning and tax mitigation kind of go together. And it does, because you're not only talking about maybe wealth transfer taxes and things like that, but that estate plan needs to be solid to help you against maybe litigation issues, divorce. All of those things have to be taken into account. Do you have children or grandchildren that have maybe some habits or issues that would be of concern if they got a lump sum of money? All of that weighs in.
I take from this conversation, you're not throwing CPAs or accountants underneath the bus by any means.
Absolutely.
But it certainly circles back to your statement earlier, which is you have to build a team. And Carol, I've known you for quite a while, and I really look at you as a tax strategist. You're able to take complex situations and mitigate that tax problem. And I'm assuming that you work with other CPAs and accountants to accomplish that. Is that right?
Yeah, there's no way one person can do that kind of advanced planning without having several professionals in the room to do that, because it's just critical. I mean, you need an attorney, you need a CPA, you need a financial advisor, you might need, in this case, an exit planning specialist or an M&A advisor. I mean, when you look at it, you really need the whole team to come to the table and work on your behalf. It's really interesting because a mentor of mine told me once, when you're a business owner and you have something that you have to accomplish, you either need to learn it, hire it, buy it, or partner it. so all the pieces have to come together. And having the right team in place is exactly, is going to bring you the best outcomes.
You made a statement that I want to ask you about, and that is often many business owners have most of their capital tied up in their business. Now, I've heard numbers 80-90% of their capital. Is that what you see when you work with business owners?
Yeah, I do. I mean, the bulk of everything they have is relying on selling that business.
Yeah, so that just validates why we're having this conversation, how important it is to think about the exit planning process. You know, the other thing I'll say, and I know this only through my experience, but when you look at all those people around the table and the team that you create, I know through my own experiences with you, it is the financial advisor or planner that is leading that team, and that is largely because you're inclined to do planning, near-term and long-term planning for your business clients. Is that true?
That is correct, yeah.
Well, I can't tell you how much I appreciate this, but before we go, I want to go back. Let's circle back to a topic that I may have accidentally taken you off that topic, and I apologize for that. But let's go back to capital gains, because this is so important. You talked a little bit about charitable planning. Mm-hmm. Is there any other thing I can do as a business owner? I sell my business, and I decide that I want to mitigate this capital gains. Is there anything else out there, or is charitable planning the only thing?
No, it's definitely not the only thing. It's just one of the things that is probably the tool that's pulled out of the tool bag most often. There are other strategies. There are a number of different types of trusts that can be used. There's the film investment, it's based on IRS Code 181. There's the charitable aspects. So yeah, there is a wide range of things, and sometimes it's just what are you most passionate about, or what is going to fit best for your situation.
Yeah. Well, it's interesting you make these statements because us are interested in mitigating our capital gains if there's a way to do it. And, you know, the one thing I know about you and your practice is that you absolutely follow the IRS code. If it's not hardwired into the IRS code, I have respected your work because tax shelters, tax scheme is never part of your vocabulary. It's certainly not part of your practice. And I think that, you know, here again, I hope you're okay with me coining the expression of you being a tax strategist, because you're going to be able to look at things that maybe are not mainstream, but they are certainly part of the IRS code. And what we can look at doesn't matter what your, you know, your political lean, or you're Republican or Democrat. The truth of the matter is, whether you care for our government or not, there's so many incentives there. The IRS code is filled with different incentives for us to reinvest into various programs. Do I have that right?
That is correct. I mean, they have the code there for a reason. I mean, I kind of hate the word loopholes, but they're legal and ethical loopholes that are there for us to take advantage of. And I know that we're talking mostly now about exit strategies and exit planning. So those are, but what about while you're running your business? What about the tax strategies that you may not have heard of that you are missing out on right now while you're running your business? And by taking advantage of some of those, couldn't we increase the value of that business? You know, all of those kind of things. I mean, there's just so many different things in the IRS tax code that you could take advantage of while you're running the business, and then also when you want to exit the business.
Yeah, so true, Carol. Thank you for making that statement. I know one place in particular that we have some cases we're working on now is tax credits and incentives such as R&D credits or other types of credits that you can find for a business owner. And goodness, if I'm a business owner and you find cash from my business, that's a game changer for me. So
well, sometimes it's a very significant amount of cash. I mean, I'm talking about a little amount of cash. Depending on the business, it could be a nice chunk.
Well, I appreciate that. And if there's any message here today, to me, it's start that conversation. And to your point, it doesn't matter whether you're 2 years, 5 years out from maybe exiting your business. There are certainly things you could do today to mitigate taxes. And of course, it's all about the process, right? Mm-hmm. And we've learned today that through even the value acceleration methodology, there are things you can be doing years in advance to make sure you have a brighter and more successful outcome, right?
Right. Well, not only could be doing, but probably should be doing.
Good point. Carol, let me just say I thank you for making time to do this with us today.
Well, thanks for inviting me to participate.
Well, I know your time's valuable, and I can't tell you how much I appreciate you doing this. I am also grateful for your leadership in Florida with the Scope Institute. Our goal is to educate and inform as many business owners as possible throughout the state, and you're leading that effort. Thank you for your time and your energy, and in particular, your time today. Thank you.
Thanks, Brent.
My next guest is a gentleman by the name of Bennett Leibowitz. And in this particular discipline of understanding how to look at your business and position it for the buyer is what this next segment is about. So, Bennett, I'm going to have you patch in. It's really good to see you. Bennett, one of the first things I'd like for you to cover is once a business owner decides that they may want to exit their business or sell their business or transition their business, help us understand what that looks like, because it's just not a knee-jerk reaction. It's very important that you help all of our business owners understand that there's a process involved with this. If you don't mind, let's start there.
Yeah, that's it's a loaded question, but and there's a lot of moving pieces to that question. I would say, I think most business owners look at their company from the perspective of blood, sweat, and tears that have gone in to grow that company. It has created a great lifestyle for the ownership group. It has created jobs for the employees. Unfortunately, when you go to sell, you are now positioning your company to be evaluated by a buyer, and they are an investor, and they want to understand the risk that they are going to potentially take on when they buy your company. So it's a very different process that a buyer looks at their business versus what the ownership group is looking at their business. And so what we try to do is come in and provide a different perspective. We want to walk them through what they're going to go through during the due diligence. So we have coined kind of the terminology around pre-diligence. So we evaluate the companies based on a earnings perspective as well as an operational perspective, so that when they go to the market, that there's not going to be any surprises. They know what the buyer's going to uncover. They have either seen it firsthand, and we have had conversations around mitigating that risk, or we have looked at it from a standpoint and said, this is a risk worth, kind of leaving on the table. We have more important things that we need to pay attention to. I think the challenge is that most business owners are looking at this from the perspective of people who have already sold their companies. And so the true stats are staggering in the sense that 70 to 80% of companies that go to market will not sell. And so you have to look at your company and evaluate it. What are the unforeseen risks that are going to prevent your company from selling? And if you have enough runway to fix those areas, then you can position it to go to market and really not only sell successfully, but sell for maximum value.
One of the areas that I know you bring to bear is the topic of valuation. In other words, what's my business worth? And I think a lot of us business owners, we struggle with that. We just simply don't have a good read on it. If you don't mind, share your thoughts about this very topic.
We call certain businesses income-based business versus a value-based business, in the sense that the owner is still working in the day-to-day. A lot of the sales are generated because of the owner's efforts. And once that company sells, the ownership group is going to be exiting from that company. And the buyer has to re-establish that company from a different perspective of how it's going to continue and thrive to get the return on their investment. And so when you find a company that is an income-based company, we really need to go in and evaluate, how do we transfer this knowledge? How do we transfer the 40, 30, whatever years you've been in this company, building it and growing it? How do we transfer that to a new ownership group and still let it thrive and continue to flourish?
Let's go another direction, because we've had many conversations about this, and one area in particular that you tend to talk about is the hidden potential in my business. Help us understand, for all of our attendees, what does that mean? When you talk about hidden potential in my business, what does that look like?
The hidden potential are the little nooks and crannies of your company that you just kind of don't look at and pay attention to on a day-to-day basis. But when you position it to sell, a buyer's going to come in and really evaluate that, because that's what's going to create that continuity. You have been involved in your business day in and day out, and so you don't really pay attention to certain aspects of the company that a buyer's going to look at and see as either a value add to buying this company, or it's going to be a risk. And so what we try to do is we come in and we really evaluate, yes, you're profitable. Yes, we want to look at your EBITDA and understand, what those multiples are going to look like for your company. But when you go through the due diligence process, what ends up happening is it's the operational facets that really come into play. Do you have a good culture? Do you have a lot of employee retention issues? Do you have a strong leadership team? Are sales 100% reliant on the ownership to create new opportunities? And systems and processes. I'm going to come in and I'm going to buy your company. I need to understand that I can operate just as it did the previous day, as it did the day that I bought it. And if you don't have documented systems and processes, that's going to be a huge risk. And that's going to also discount the valuation that the buyer is going to offer, because they have an ROI. They are looking at a certain number that they need to get from this investment. And so everything that they look at that's going to detract from that ROI is going to discount the value. And so what we want to do is we want to look in all the nooks and crannies. We want to evaluate your company from top down and understand how much of an impact to the value that this is going to have when you go to market. And if, once again, if we can come in and help you fix some of these aspects of your company, then all of a sudden what was a risk becomes something that's a huge premium add to the valuation.
Good information, Bennett. You mentioned uncovering the profitability in your business, and one aspect that maybe we've never thought about is the operational side. And when you talk about discovering some of the profitability in your business, if you don't mind, take a little deeper dive on this very topic.
So, yeah, I mean, if you look at the things that really impact your profitability, yes, it is, the cost of goods that you're providing and things along those lines, but it's really your general administrative costs that come in, your marketing, things along those lines. Are you paying your staff the right wages? Do you have efficient processes so you can get the most out of your staff? Do you have the right people in the right seats? Is there alignment or misalignment within your organization? Is the leadership talking to, the people on the ground level and communicating clearly what is going on and what the initiatives are and what the expectations are? A lot of times we come in and a lot of the issues are just strictly around communication. There's a lack of communication, clear communication of what the expectation of the top leadership group is and then what each department is responsible for. And so if we're not going in and actually setting clear objectives for them to follow, then we're already setting them up for failure. But on the back end, if we don't have systems and processes that they can follow and hold them accountable to, then when things start kind of getting off the rails a little bit, we don't know where to spend our time and energies on to fix it. So we're going back and restarting that whole process over. And so we really want to understand, are the systems within your company efficient? Are they still working, or were these done 10 years ago and they're no longer valid? It's almost like muscle memory. People are just coming in every day doing their job, but it's not creating the same return on their efforts. And so all of these little conversations and little facets of your organization, they tend to get pushed to the side because they're not necessarily directly seen as impacting profitability on the P&L.
Bennett, thank you. I think that's very helpful. Let's talk about something else that I hear you reference on a regular basis, and that's strategic transition planning. So the bottom line is, if I'm a business owner, I want to get top dollar for my business. I want to get top dollar for my life's work. Help us understand what strategic transition planning means.
I think one of the things that we believe heavily on with Pando is having a thorough and comprehensive assessment top down within your company, looking at really every aspect so that we can understand where are the biggest priorities. Because if we go into it blindly and not paying attention to, hey, we're going to start over here, not understanding what that's going to do to other facets or other departments within the organization, we are spending more time, energy, and money that most business owners don't have or don't want to necessarily spend on. And so what we try to do is we go in and create a lot of data points so that we understand where the biggest risks are and where some of the biggest priorities are. And then we build out a roadmap. And the roadmap is really kind of that blueprint for success, right? It's saying, hey, here's your timeline, here's your objective, here's what you need to sell the company for, because that's a huge part of the conversation that we don't necessarily take on, but we rely on other financial advisors for our clients to kind of walk them through that conversation. What do you need to be financially free once you sell this company? Because you got one shot at this. So we need to make sure we understand that number at a very deep level to ensure that 5-10 years down the road, you're not gonna need to go back to work. And so by pulling all of these different objectives with the data that we collect, with the roadmap that we develop, then we start kind of building out this strategic timeline of saying, okay, we don't care when you want to sell, but if you're always positioned to sell, then you're always going to be able to enter the market from a position of strength. And versus high pain, low profit, I want to get out of this is a nightmare, and I go to market. Well, nobody wants that. right? It's buy low, sell high. And so we always want to position our clients in a way that they're always ready to go to market, because there are other aspects outside of your company that really impact your ability to sell. If you look at the last 4 years since COVID, when interest rates were, in the 2s and 3s, multiples were crazy. Cash was flush. The market was ripe for acquisitions. And so they were doing that. Now you switch gears a couple years later, we have interest rates at 10%. There's not as much money in the market. The geopolitical world that we live in is impacting that. And so these are factors that really play into what your multiple is going to look like outside of just your business itself. There are economic factors and market factors that play into this, and you need to be aware of that, because you may be trying to sell at the wrong time, and that could discount your valuation tremendously if you just wait a little while and wait for the market to come back and you're ready to sell. You could increase your valuation of your multiples.
Bennett, thank you for your contributions. I can't thank you enough for your time, your expertise, your knowledge has been very beneficial to our attendees. We're going to move on, but again, I can't thank you enough for your time. My next guest is a mergers and acquisition advisor. What is that? You probably will want to know if you're considering the exit, transition, or sale of your business. So my next guest is one of the national thought leaders on this very topic. His name is Scott Bushke. Scott, it's good to see you. Welcome to our program. Tell us about what is an M&A advisor? What role do they serve? If I'm a business owner, why do I want to know about the M&A space?
Depends on the size of what kind of clients they're serving, but the clients that we serve are typically what we call in the lower middle market. There's the business brokerage, kind of $0 to $2, $3 million deals that are served by the business brokers of kind of Main Street America, bars, restaurant, retail. And then there's the large investment banks that come in at, they don't get on bed for at least $1 million fee or more success fee, so that might be 50 or 75 million on the top side. So where we fit in this lower middle market of this, call it 3 million in enterprise value to 50, 75 million enterprise value, or 5 to 150 million in revenue, we typically generate multiple offers, which helps them understand, allows them to choose who's the best fit for them and the ultimate structure.
Okay, thank you, Scott. Now, let's talk about some of the misconceptions with regard to selling a business. Help us understand what are some of the common misconceptions and misunderstandings about selling my business.
A business owner typically gets one chance to sell their business, and they want to keep it confidential, so they don't go and talk to anybody. So it's kind of the blind leading the blind, a little bit of them trying to figure this out. And so the biggest misconception is what the value is. And unfortunately, most people think there are two camps. And there's one that go, my business isn't worth anything. And we had a gentleman with a PhD and did psychology work and things like that. And he had 17 therapists, and we ended up selling that company for $1.7 million that he would have left on the table. But the main group, the bigger camp, much bigger camp, is someone who thinks their company's worth $10 million and it's really worth $6 million. And unfortunately, they find that surprise out at the time of the sale or when they go to market, because they haven't done the valuation, they haven't worked with anybody. So thinking their business is worth more than what it really is number one. Number two is that they could do this alone, or they could do this with their team, their current team. So that's something that, hey, I'm a business owner. I know my business better than anyone else. I'll be able to sell it. I'll just call my competitor down the street. Well, unfortunately, calling the competitor down the street is sometimes the absolute worst buyer to call, because they're going to, sure, let me get a bunch of information from you, and they gather all this competitive intel, and then they throw a lowball offer, or they don't put an offer out there as well, because they've gathered so much information on you, and they can go out and unfairly compete against you. And there's actually surveys out there now that a company over $5 million in enterprise value, 70% of the time or more, that buyer's going to come from 100 miles away or more. So, to just think that you're going to call the competitor on the street doesn't make sense. And also that you can do this with your CPA or your attorney that are typically generalists. And again, they're very, very good at what they do. But I liken this to, you go to your doctor and you have physicals done for the last 30, 40, 50 years, and that doctor knows you and your body better than anybody else in your health, and you like them, they know you, and you've developed a relationship. But also now, they've found a tumor in your brain, and you need to have brain surgery. Just because they're a doctor doesn't mean that they're going to go in and do that brain surgery, nor would you want them to if it's a life or death situation. So you bring in the brain surgeon, they do the work, and then you come back to your general doctor after the fact. So that's the same thing with selling your business, is you need to build a team around you of an M&A attorney, not just your attorney typically. So your CPA absolutely is at the table, but you might need a tax strategist who can really get into tax strategies and minimize those taxes. You need an investment banker like Cornerstone or someone that can run a process and understand what the value is and have the resources to get all those buyers to the table. And we kind of call it herding the cats and getting all of the offers at one time. And all of those people work together along with insurance professionals to help protect the company ahead of time, and everything else is another big one. And third, I would say they don't know how important it is that to start sooner, to start that conversation sooner. They think, I'm not going to do any planning or contact anybody. I don't need to talk to an investment banker until I'm going to sell my company. And that's just not true. Where we could do this estimate of value and very economically in 2 to 3 weeks, and we do those 5-10 years in advance, because that way it helps them give the idea of what are they worth today, and we give them ideas of, hey, you're doing these things well, but here are 2 or 3 areas that you're not doing as well as your competitors, and focus on these areas to make your company more saleable or more valuable. So I think, building a team around you, understanding your value, and starting sooner in the process. Those are the 3 probably biggest mistakes that business owners make. And again, think about if you're a business owner and you try to do it yourself, and it's like going golfing. I've never golfed once in my life. I go out to my country club and I see the club pro and I go, hey, I want to play you. Give me a set of clubs and you are going to play for my business today. How do you think that's going to work? He's going to clean your clock, or she's going to clean your clock every single time. And that's what happens in selling a business. You get one at bat, you get one chance to sell your largest financial transaction or your largest financial asset. It's typically 70 to 90% of your net worth. And you're going up against private equity groups that are trained. They're brilliant people they wake up every day to try to get the best deal for themselves and their companies, or a corporate development team that, again, they know all the tricks and the things to say to get you into a one-on-one negotiation, that they know they're paid to get a good deal, not to pay you the most money for your business. So you're doing this once, and you think you're going to do it yourself. And on top of that, it's typically, most of our clients talk about, this is like giving up one of their kids for adoption. So think of all the emotions that come through that. So not only do you not know what it's worth, you don't know the process, you don't know what's market, but now you're also trying to think of this as one of your kids up for adoption and the emotions that come out of that. So you can see with just those couple things, and there's endless more mistakes that people make, but those are the big 3 or 4 of why only 20% of businesses successfully sell out in the marketplace.
Scott, thank you so much for your time. Your expertise in this space has been very valuable to everyone in attendance. I can't thank you enough for your time and participating in the Scope Institute online event. Ladies and gentlemen, that concludes our event. I want to thank you for your time, and I certainly want to thank our national experts who have appeared on this program to help you understand some of the very important nuances, methodologies, and ways that you may successfully exit your business. You may choose to transition your business to your adult children, or even senior management, or maybe even your employees through an ESOP. You may choose to exit your business through an external way, which could be a private equity firm. Who knows? Maybe even your competition. But if you do this, make sure you go about it the right way. Make sure you inform yourself, educate yourself as to the process in order to do this successfully. We are talking about, in many cases, your life's work. I hope it's been informative, educational, and helping you make decisions and guide you on your journey for when you decide to exit your business, no matter when that day comes. Thank you, and have a good day.